One helps a business that is successful here go on to be successful there and there and there. The other enables investors to share in that success. They are two sides of a global organization, working together to make it happen for clients around the world. GBM Banking, the right place for clients looking to list on a stock market, raise capital, acquire companies, and manage their risk exposures. GBM Markets, helping clients to achieve their investment, hedging, and finance strategies by trading on the markets at just the right time. RBS Global Banking and Markets, right here, right now. Why do clients need an investment bank like us? Our business can provide them with expert financial advice and access to capital to achieve critical business goals, whether those goals seek to focus on their core strengths or signal a step change in strategy, such as the acquisition of a competitor. But what triggers interest in a potential merger or acquisition? Is it when a company is performing well or when it's facing tough times? Is the best time to strike the deal when the business is still in its infancy or when it's maturing? Does a listing on the stock market make a private firm more attractive to investors? Or is it when an investor is given access to the financing to do the deal? The simple truth is every one of them could trigger the interest of a different investor. Our deep understanding of our clients' businesses not only gives us the ability to identify and recommend opportunities that meet their immediate needs, but also to anticipate new needs as they arise. We build close relationships with our clients. We get to know their businesses, their goals, and their strategies, and we engage them in an ongoing dialogue. All so that we can tailor solutions and develop products that are built around their needs. As true business partners, we're well placed to do that, and able to combine deep sector intelligence, know-how across the whole range of investment banking products, market insight, and creative thinking to meet our clients' needs 24/7 right around the world. So, when we're mandated by a client on an acquisition assignment, our depth of understanding means it's not only possible for us to advise on whether to proceed and how much they should pay, it also provides the catalyst for ideas that can unlock new business opportunities. Is there one best way to finance a company looking to make an acquisition? Is it through equity, debt, or a combination of the two? Do we underwrite an equity or bond issue and have confidence in our ability to sell it on to investors in the market at a price that works for all parties?
The main types of equity raising we'll look at for our companies are initial public offerings where we'll float companies onto the stock market, rights issues where we'll raise additional equity, offering the first rights to the current shareholders. An ECM team, which is the equity capital markets people, they're solely focused on raising equity for companies, be that through IPOs or rights issues or other share placement methods. However, because we're an advisor, our role goes far beyond that. If one of our clients wanted to purchase another company, we'd probably, from the first point of view, look at it in terms of how the market would respond to that. So you'd look on the first hand, strategically, how does a deal suit the company? Would this be beneficial to them? And secondly, we'd look at how the market would respond to this. So is this a deal that the shareholders would want? Is this a deal the market would react favourably to? Because we sit in between the advisory side and the equity side, the markets are one of our key focuses. So we put a lot of emphasis on what the shareholders would see from the deal.
Or perhaps we want to finance their growth using our capital. If so, are we prepared to carry all of that debt on our books, or is it better to syndicate a loan out to other banks to reduce our own exposure?
In terms of M&A transactions and when DCM goes into it and when they become part of it, it really does depend on the company and how close of a relationship the product bankers, so that would be the DCM bankers, have with a client. If, for example, that the relationship manager, so that's the person who essentially has the relationship with the client and will talk to them regularly about their needs and their requirements. If they've approached the M&A team first to say, this is the transaction they're looking at, what do you suggest? And then they decide, okay, we think that the best product to use to raise financing is debt, and we think that they should use a bridge facility. So that's a type of loan which would be of a shorter tenor, so you would be repaying that amount a lot quicker, and it would be bridged to something. So for example, it could be bridged to debt, to a private placement. So that would mean that to pay off that bridge, you would need to issue a private placement, which is another debt product, to be able to pay it off. So for example, you could have bonds, which is a loan that's given out, to a company, and it will have a longer tenor, it'll have quite a few investors in there, and it will have documentation points that would have to be followed by the company, and then at the end of maturity it would have to be repaid.
RBS can answer and advise clients on all types of financing. We truly are a one-stop shop. Any advice we give our clients is founded upon asking the right questions and looking in the right places, investigating the past and present of the target company, its people, and its records, examining financial statements, breaking down the numbers, making projections and forecasts, confirming information on pensions, taxation, environmental liabilities, ownership of intellectual property. It takes time, but is essential to learn how the company is built up. It's like putting together one giant jigsaw puzzle, and you'll only get an accurate picture of the target company once the final piece is in place. Of course, our client may not be the only party to have expressed an interest in the target company. There's always the risk of competition. And it's only natural that the seller wants to get as high a price as possible for the business being sold. Which is why we offer clients the benefit of our expertise throughout the negotiation period. We work with clients, conducting negotiations in the most effective way to conclude the deal. We know how much they can pay, how much they should pay, or whether they should just walk away. By understanding our clients, their businesses and their strategies, we can devise new ways to help them succeed. And we can help them get a competitive advantage in all kinds of ways. We have a breadth of offering in GBM banking that goes way beyond our competitors. It includes the full range of investment banking products, of corporate finance, equities origination, debt capital markets, sector and country coverage, and portfolio. And of course, GBM banking is only one side of our integrated approach. Anything can trigger it. A subtle change in interest rates, word of better than expected results, a movement in the foreign currency markets. Our salespeople identify potential investment and trading opportunities as soon as they emerge, and ensure our corporate and institutional clients are kept up to speed with them. They suggest innovative ways to hedge risk, and put forward ideas that can help clients secure additional capital. It starts with a thought, a notion. But by working closely with colleagues in structuring, research and strategy, it can become an innovative solution. It's about understanding businesses, markets, and everything about the world in which they operate. It's about making the connections, providing the kind of insight that can lead to a defining investment opportunity. Our research and strategy teams provide insights into the economy, interest rates, foreign exchange, credit, emerging markets, and commodities. They see the big picture with an eye for the tiniest detail that can keep our customers ahead of developments in the market. And solid research provides the foundation for us to structure derivative products and innovative solutions that allow our customers to gain a competitive edge. Our research and strategy teams work across sectors and geographies to get the vital information our traders, structurers, and sales teams need. To bridge between trading and sales, our structurers build sophisticated derivative products based on the complex needs of our clients.
To develop a new product, it can take anywhere between a couple of days to a number of weeks or a number of months, depending on how complex the product is. Structuring have to understand the limitations that trading have. Any product that we design will go into a particular trader's book, so we have to understand the limitations of that book and of what the trader can and can't do within his setup. There are also products that they like to trade which suit their book, which offset other risks that they have. So we look for those sorts of opportunities and take those opportunities to them wherever possible. The most popular type of products that we work in interest rate derivatives is the swap. The swap is fairly common nowadays. It's exchange traded. It's fairly easy for clients to understand. So there's quite a lot of those going around. So we get a lot of swaps, a lot of caps, which is a very similar product. So those are the main two products that we work with.
Few places are more pressurized than the trading floor. In their market-making capacity, our traders provide liquidity in various financial products to our client base. Success hinges on their ability to anticipate and adapt to movements in the market. It's down to the trader to gauge the market's liquidity and the direction of price movements. We rely on the recommendations of our structurers in order to make the final refinements to the product and pricing, to help the client achieve the optimum balance between risk and reward. By understanding the operations of the businesses we serve and the markets they operate in, we can devise new ways to help our clients succeed. And of course, markets is only one side of our integrated approach.